these. I mean, did you hear about Mt. Gox, right? So apparently they have 150,000 Bitcoin that might get unloaded. Now, market doesn't care about that right now. But if we were to get another leg down, do these margin calls, bankruptcies, all these factors start to kind of trickle through?
Welcome to the Daily Crypto. For today's video, we have the highly educated trader Gareth Soloway with us. He will be updating us about the recent moves all financial markets have been making and what we can do to stay safe and make some money during these times of uncertainty. Without any further ado, let's jump right in.
It's looking at the commodity prices and trying to gauge when they started to fall and then how long does it take to pass through to the consumer. So I guess I would say I'm not super surprised, but I do think that this is the top on CPI readings. And I do think that by next month, you're going to have this full month plus of oil falling, copper falling. I mean, all these other commodities just collapsing pretty dramatically. And that probably starts to show at least next month a slight downtick.
With the recent drop of 10% in oil prices, Gareth believes this is the top for CPI ratings. According to the financial analyst, we can expect a full month of price drops in major commodities like copper and oil.
When people were saying, $150, $200 oil, I was like, what planet are you guys living on? I'm looking at people changing their driving habits dramatically. And then you throw into the mix the Fed hikes, which is going to slow the economy. And I'm trying to figure out where are these people? And we're talking about analysts. I mean, Goldman Sachs. I mean, these players that should have immense knowledge, they're calling for these ridiculous price targets on oil. And I just did not see it.
It is true that some major names like Bloomberg and Goldman Sachs predicted oil to shoot up to the $150 to $200 per barrel mark, which for Gareth seemed completely unrealistic.
Yeah, and I think also to keep in mind, I think you can see the stock market reacting today. Like there were a lot of individual investors, and I saw it on my Twitter feed today, that when that print came out, they were kind of, oh my goodness, the end of the world. And you saw the markets initially get crushed. We saw a big gap down, but the market started to recognize exactly what we've just said, which is this is peak inflation. All right. This is as high as it's going to get, at least in the near term. Now, it doesn't mean, and I think you would agree, we're not going back to 2%. I mean, that's not happening for a long, long time, if ever. But it's the market wants that little bit of hope. And just to see that number down ticking, which if you look at any commodities out there, you should see that next.
With the drop in oil prices, the stock market dumped initially, but then traders like Gareth started to recognize patterns that pointed to the fact that this is peak inflation and the markets can only improve at this point. Soon after, we saw a good overall recovery.
I'm in the camp that it's going to be kind of that 4 to 5% range it's going to come into. And then unfortunately, the metrics that the Fed is taking to control it will then probably cause a slowdown that might start to get out of control a little bit by the Fed. And then the question is, at a 4 to 5% handle on inflation, does the Fed start to say, okay, we need to start to loosen policy?
Gareth believes that inflation should drop down to 4 to 5%, which does seem very likely at this point, given the recent Fed policies. But it will not stay there for long, because the government will definitely take some measures to counter unemployment, which will be between 7 to 10%, which is quite concerning to say the least. However, it won't happen overnight, as Gareth expects it to happen sometime in 2023.
Signals. I mean, the Fed has to be looking at it like we're looking at it. At least I really hope they do. Otherwise, you really start to wonder about the Federal Reserve, where they see the economy starting to slow. They see these commodities coming down, which are gauges of economic growth, as well as projections on forecasting economic growth. And they have to be saying, okay, let's stick with 75 basis points and then we can reevaluate. Because I think after this Fed meeting, there's not another one till September. So that would be my guess, is they kind of go back into that wait and see mode and then see where we are.
With the next Fed meeting scheduled in September, Gareth says the Fed is more likely to stick with 75 basis points just to experiment how it goes, because the economy will definitely be slowing down and commodity prices will start to drop. Finding our content value-packed? Consider subscribing to our channel and liking this video so we can keep pushing out quality content like this coming out for you to benefit from. Gareth is waiting to see what the big players.
I do think that at this stage, the midterms now is kind of a hopeless battle, and they're probably looking forward and saying, okay, well, we now have what is it, 2 more years to go before the next election for the president. How do we get things in line so we start? And again, they're going to have to get things in line well before that election, and probably a year before things will have to be really on point, and then they can go there. By the way, one other thing I wanted to mention is people aren't talking about it, but really watch the PPI number tomorrow. And the reason I mentioned the PPI number is because it's producer. So the way inflation works is the triggers first occur on the producer side. The producer then passes it to the consumer. So it could be possible that we could see a slight downtick in the PPI tomorrow, which would then filter through to the consumer next month. And it's just something interesting. I don't know if that will happen, but it is a possibility. And again, that's just something no one's talking about tomorrow in terms of that PPI number actually being pretty big, because it is a kind of a forecaster for the CPI.
Gareth expects the government to get things sorted at least a year before elections, because they don't have a lot of time on their hands. He also thinks that the producer price index might have a downward move and ultimately result in the consumer price index rising the next month. Although it isn't too far off, we will have to wait and watch.
Yeah, and I think JP Morgan reports tomorrow. The bank stocks are later this week, the rest of them. And then I think next week we have Netflix. IBM usually reports that next week. And then after that, you get into the craziness of Apple and all. I mean, and that Apple is going to be fascinating, right? Because you're really talking supply chain. You're talking about demand for their products. I mean, there's so many things in that stock that we'll know about the economy and the consumer as a whole, not just domestically, but globally. We know they have a huge footprint in China as well.
With earnings coming out next week, Gareth is waiting to see what the big players are looking like financially, because big companies like Apple can be a great indicator of where the economy is headed towards. With supply chain issues, Fed policies, and rising inflation, it will set the tone for what we can expect in the near term.
Yeah, so I bought gold this morning right after that CPI number. I picked up more gold because I just love those flushes. Again, as soon as I started to think about, is this peak inflation? Then what? And again, it's very counterintuitive because people think, oh, peak inflation comes down, maybe gold doesn't do so well. But I was looking at the dollar, right? And the dollar has been screaming, and we can take a look at the DXY, and the DXY was right into major resistance here. So here's your DXY chart. And again, look at this beautiful reversal on the dollar today after initially popping up. But if you go to a larger time frame, let's go to the monthly. What you can see here is you have two trend lines that are converging right at the high on the dollar here. So big resistance on the dollar. And again, for me, at least, this was a signal that an overbought dollar with peak inflation. And again, we've known that with inflation, the dollar's actually strengthened. It likely starts to come back in here, as the Fed may not have to tighten quite as much if we do see peak inflation. So everything that was kind of, the dollar has been crushing the stock market. We've seen it crush commodities. So I was looking out there across the board at so many different things, from tech stocks to gold to silver, all those types of things in terms of looking for some opportunities.
He reveals that he bought some more gold because the dollar is sitting at a very strong resistance point, and a reversal can be expected from here. According to Gareth, the dollar is overbought and has to come down from here. And as we know, when the dollar falls, gold usually goes up in price.
Yeah, I mean, the dollar's move is incredible. I mean, absolutely insane. I mean, even gold. Gold recently has dumped out, but for the most part, if you look at where gold is from the start of the year, I think gold is down maybe 3% or so from the beginning of the year. The dollar has rallied, I think, about 15 to 18% since the start of the year. So for me, that's kind of an indicator that there's money flow going into a gold type position. And so again, gold hasn't been a great performer. Granted, compared to the stock market, compared to crypto, it has been amazing. But still, you haven't seen it outperform to the upside in a major way. But I think, again, I'm still a big fan of gold down here. If the dollar really starts coming in, gold could really be up for a big move to the upside.
The US dollar has been outperforming gold up until this point. But if we compare gold to crypto, it has performed significantly better. And with a decline in dollar expected, Gareth believes gold is just getting started for a big move to the upside.
But I think people were not, most crypto investors, all they do is focus on crypto. And again, I think that's what my stock background has been very good for, kind of seeing the bigger macro picture. And you have to understand that if the dollar wasn't surging, I think crypto would be much higher than it is right now. And if the dollar is topping, and you can already see the reversal in crypto as the dollar's fallen today, I think crypto has upside. I'm still in the case here where my midterm outlook is still down, but my near-term outlook is to the upside. I think we take out the short-term highs of 22, and I think you're probably headed back to at least 25.5 here. And that's assuming the dollar really has topped and starts to come in over the next couple weeks.
Since Bitcoin and dollar have an inverse relationship, the recent surge in dollar has prevented Bitcoin from performing as well as it could have. But if Garrett's prediction about dollar topping off proves correct, we can still see Bitcoin rising to the $22,000 to $25,000 mark.
I'm always fully aware that anything can happen, right? I mean, we could go lower, we could go straight up, but ultimately there's still too much junk in the system. And we've seen bankruptcies, we've seen Terra Luna kind of collapse and all these other things. But I don't think, I mean, for me, I still look at how many cryptocurrencies are out there. That's still problematic to me. Like, how the heck can there still be over 10,000 or 15 or 20,000 cryptocurrencies? Where does the washout finally occur? And so it would be hard for me to imagine that we're really done here, especially because of this, right? So think about this. Previous cycles have always had the Fed helping by printing. This is the first cycle we don't. So the logic would dictate this would be the worst of all the cycles versus the best of all of them. Now, granted, you do have more adoption, so I think you have to factor that in. Maybe if regulation came out, I think that could be a possible major positive as well. But I'm still in the camp. I got to think that we're headed lower after we get some sort of uptick here.
Gareth makes a very interesting point by mentioning that the Fed has avoided disaster by printing money. However, at this time, it has to be the worst recession as there is no new money coming in. He still believes one final shakeout is imminent for the crypto space, and we will be seeing new lows before entering a new bull market.
I mean, so let's say the price gets driven down to 12,000 or 10,000 on Bitcoin, which I don't know where Michael Saylor's margin calls come in. I know he has leveraged out a little bit, but that would be the other thing that would be really scary. Like if we started to break, let's say the 17.5 low, where is his point where MicroStrategy has some issues there? I don't know. I don't remember. Initially I heard it was around 21,000, and then I think he kind of updated it and said it was lower than that. But that would just be something else to kind of keep in mind, is that when you have an illiquid asset like Bitcoin, if any of these, I mean, did you hear about Mt. Gox, right? So apparently they have 150,000 Bitcoin that might get unloaded. Now, market doesn't care about that right now, but if we were to get another leg down, do these margin calls, bankruptcies, all these factors start to kind of trickle through? So I could almost be on your page where maybe this is a bottom if we don't go at all any lower. That would trigger more bankruptcies, which would be more liquidations and those. But if we do take out 17.5, that's where I would get real nervous, minimum going down to 12,000, maybe even sub 10.
If we were to drop down below 17.5, that would be pretty serious, because then we will be seeing some huge margin calls like MicroStrategy, because they are leveraged up on some of their holdings. If we were to see such an event, that will all pile up and could perhaps result in the final flush Gareth has been talking about. However, he believes Bitcoin will not go below 12,000.
I mean, I think crypto is a case in point. There are so many freaky similarities with the crypto bubble and the .coms that it's you can't even deny it. And it makes a lot of sense. I mean, think about how much insanity was in the .com era, and then look at what's happened with the Wall Street bets and the GameStops and the AMCs and, you know, Robinhoods and crypto. I mean, it is so similar.
Gareth Soloway says we're in a crypto bubble, just like the .com bubble of 2000. There is no denying that a lot of similarities exist, which just can't be ignored. If we really are in a bubble of that scale, a huge crash is inevitable. We hope you found this video useful. What do you think about Gareth Soloway's predictions? Let us know in the comments. Share this with your friends so they can stay safe and stop losing any more money.